దూరవిద్యా విధానంలో డాక్టర్ బిఆర్ అంబేద్కర్ ఓపెన్ యూనివర్సిటీ దేశంలోనే మొట్టమొదటి సార్వత్రిక విశ్వవిద్యాలయం. దాదాపు 2.5 దశాబ్దాలుగా దూరవిద్యా విధానం ద్వారా కంప్యూటర్ కోర్సును అనుసంధానం చేస్తూ BA, BCom, BSc డిగ్రీ కోర్సులను అందిస్తోంది. పోస్ట్ గ్రాడ్యుయేషన్ స్థాయి, డిగ్రీ, డిప్లొమా స్థాయి కోర్సులను ఔత్సాహికులైన విద్యార్థులకు అందిస్తోంది. డాక్టర్ బిఆర్ అంబేద్కర్ సార్వత్రిక విశ్వవిద్యాలయం స్థానికంగా స్వయం బోధనా పద్ధతిలో ముద్రణ రూపంలో రూపొందించిన కోర్స్ మెటీరియల్ అందిస్తోంది. కోర్స్ మెటీరియల్ అధ్యయనానికి సహకరించే విధంగా రేడియో, టెలివిజన్ పాఠ్యాంశాల ఆధారంగా కార్యక్రమాలు ప్రసారం చేస్తోంది. అధ్యయన కేంద్రాల ద్వారా ఏర్పాటు చేసే సలహా సంసర్గ తరగతులు, సైన్స్ ప్రాక్టికల్ సౌకర్యాలు విద్యార్థులకు స్వయం అధ్యయనానికి ఒక చక్కటి అవకాశం. ఇవి విద్యార్థి సమీపంలో ఉండే అధ్యయన కేంద్రం నుంచే పొందొచ్చు.
Hi friends, on behalf of Dr. B.R. Ambedkar Open University and on my own behalf, I welcome you all to the teleconferencing program on financial reporting from the course Accounting for Management for MBA students. This topic is also useful to all the commerce students at graduate and postgraduate levels. Today's topic covers what is financial reporting, what are the best practices in financial reporting in other countries and in India. To discuss these aspects, we have two subject experts along with me. Professor V. Apparao, welcome sir. He is Principal of University College of Commerce and Business Management and Dean Faculty of Commerce, Usmania University. And we also have another subject expert, Dr. A. Patricks, Department of Commerce and Joint Director from Usmania PG Admissions. Thank you, sir. Welcome to the topic. To discuss, the discussion will take place for about 40 minutes and 20 minutes will be left for interacting with the subject experts. To call on the numbers, we have 3 numbers scrolling: 04027031431. Another number is 04027031432. 04027031433. I repeat, 04027031431, 04027031432, 04027031433. Before we start the interaction, let us understand the concept of financial reporting. We all know that financial reporting is disclosing the financial information of the company in the form of financial statements to the parties interested in the company and its business operations. Now, in light of this, we will talk to Professor V. Apparao what exactly, in his opinion, is financial reporting and why it is made mandatory to disclose the financial information of the corporate. Sir, can you please discuss with our students, sir?
Okay. Nowadays, financial reporting play a significant role in modern organizations. Before going to discuss on the financial reporting, let me differentiate between corporate reporting, financial reporting and financial statements. These 3 terms are interchangeably used in the accounting literature. As a management student, you should understand the difference between corporate reporting, financial reporting and financial statements. Now, what do you mean by corporate reporting? Corporate reporting somewhat a broader term which includes financial data, non-financial data. Financial data is compiled through financial statements and it will be part of corporate reporting, and the other information relating to company policies, profile of the company and the decisions taken by the managers also will be included in the corporate report. Whereas, in the case of financial reporting, only the financial information is presented and disclosed to various interested parties, and that is somewhat narrow concept. Similarly, financial statements also somewhat narrow concept. It is a specific concept. Financial statements means the statements which are prepared at the end of certain period to know profit or loss and financial position of an enterprise is called as financial statements. Generally, conventionally, financial statements include income statement, balance sheet and cash flow statement. These are generally called as financial statements. The purpose of preparing financial statements is to know profit or loss of an enterprise and also to know financial position of an enterprise. These are the objectives broadly relating to the financial statements. Now, let us our discussion confine to only financial reporting. Now, what do you mean by financial reporting? As a student of management, again you have to specifically understand what do you mean by financial reporting. So, generally financial reporting means it is the reporting of accounting information of an entity to a user or group of user. Entity means here you have to understand company or some firm. So, user may be any internal party and external party to the organization. Otherwise, we can also define communication of published financial statements from business enterprise to the third parties is called as financial reporting. So, generally there will be internal users and external users of financial reporting like shareholders, suppliers, customers, governmental authorities and general public. So, like that the information may be useful to the different parties. Generally, there are two types of financial reports are prepared by the organizations. So, they are called as periodical reports, second is interim financial reports. Periodical reports means the reports which are prepared at the end of the certain period, maybe after 3 months, after 6 months or at the end of the financial year. So, we can prepare periodical reports. Interim reports particularly relating to 3 months or 6 months, like that we will prepare. Generally, periodical reports are prepared at the end of the financial year. Interim reports are prepared at the end of certain period, maybe quarter or half yearly. So, this is the distinction. Plus, there will be other reports also become part of financial reporting, like say newsletters prepared by the organization, chairman's report, cost audit report also part of financial reporting. Now, the purpose of financial reporting is not only a disclosure, it is mandatory because of various reasons. It is due to legal compliance, second the accounting standards, then third the diverse between the management and shareholders. Nowadays, all the activities of an organization are under the control of managers only, because shareholders directly cannot participate in the affairs of the organization, they are away from the organization. So, that is why management is accountable to what is going within the organization. So, that is why they have to prepare different reports and submit to the shareholders, like that they have to exhibit their accountability towards owners and other parties in the society. So, this is briefly about the financial reporting. Similarly, as Dr. Ravi told, so disclosure is one of the important aspects in the financial reporting. So, because of 3 more reasons, there is a need for financial reporting. One is disclosure, second is transparency, third is accountability of the management. So, these are the some of the issues you can discuss in the financial reporting system.
Sir, Professor Patrick, Professor Apparov says 3 important issues makes the financial reporting mandatory, that is disclosure, transparency and accountability. Okay. Now, though this appears to be objective, how this objective has undergone changes over the period, sir, in light of the True Blood Committee report and other committee reports?
Okay. Thank you there. Sir, what we notice is over the period of time that accounting has evolved, we have noticed that there are a lot of things that had happened in terms of the way objectives were being defined, and this corporate reporting has been one of that core subjects that is related with the field of accounting. And over the period, it has really improved the practice and the theory related with the accounting field as such. And what we notice is the International Accounting Standard Board had gone about with giving certain objectives, and it said that the accounting reporting is meant to convey the performance, the position and the changes that have happened in the position of the company over a period of time. And this is to be given to the wide range of users of the accounting information for making economic decisions. And in the process, they said that some of the objectives or why we use the accounting information is to do with, the first one they say is to help management to go about with meeting the purpose of making decisions, and it goes about with helping them to analyze things, benchmark and other things there.
Correct.
And to go about with giving information to the investors or to the promoters, to the debt and the credit providers that are there, so that they can make rational and prudent decisions that are there.
Okay.
And it goes about with giving information so that the shareholders and people at large come to know what are the various things that are happening in the company there. Moreover, if companies go about with possessing resources which have a claim against it, that is where we put about in words like equity and liabilities that are there. What are the changes that have happened in that? And how is the company procuring the resources over a period of time? And how is it using these resources that are there? Moreover, when we go about with looking at the utility to the various stakeholders, we go about saying that, as rightly Professor Apparava just said, like in the large companies, there is divorce between ownership and management.
Yes.
So in this process, what happens is the reporting process goes about with trying to communicate as to how the management is going about with its duties and responsibilities and conducting its operations ethically and diligently there. And as you have rightly said, sir, that there is an evolution that had happened, and in the early 70s there was a True Blood report that had come out from US. Similarly, there was a corporate report that had come out from UK in 1978. In 1980, there was a stamp report that was given out from Canada. Probably over a period of time we'll discuss in detail what are the implications of this in the field of corporate reporting.
Okay.
And what I notice now is there is a new form of reporting that had come in, which talks about the triple bottom line kind of reporting, which has got 3 P's in it.
Okay.
You talk about the planet, you talk about people, and you talk about profits. If it is to do with the planet part, we are trying to show our concern towards the ecological aspects of how the companies are working, or pollution related, or climate change and other things that are there.
Correct.
When we talk about people, it is to do with the social aspects, and profit goes about with trying to determine the economic aspects of the company there.
Okay. So I would like to add on to what you have said. Maybe because of the volume of the business being increased over the years, and for fraudulent practices, fraudulent activities also are increasing manifold. Maybe the reporting is undergoing changes over the years. I think you will agree with me.
Very
Yes,
true.
yes.
Yeah. So in light of this, sir, I would like to elucidate. Can you be more clear on the True Blood Committee recommendations, sir, Professor Apparava?
Okay. Now this is about the development of financial reporting objectives. Actually, till 1970s, only individual contributions are there in the accounting system. After 90s, then institutions also involving in the development of various accounting principles and methods.
Okay.
So they are in the form of now available to the users as accounting standards.
Okay.
Now regarding financial reporting objectives, so many committees and bodies are trying to develop what are the objectives of financial reporting.
Okay.
In that process, so True Blood report is one of the important reports prepared by the committee, and this is actually committee constituted by AICPA, American Institute of Certified Public Accountants, in 1971, under the chairmanship of Robert M. True Blood. And this committee has conducted interviews with so many executives from more than 5,000 corporations in USA, and ultimately they concluded that what are the objectives of financial reporting.
Okay.
So accordingly, they have proposed these are the objectives of financial reporting.
Okay.
Almost they have proposed say 8-10 objectives for financial reporting. Just I would like to share that information. Number 1 is the financial reporting should provide necessary information to the investors for taking economic decisions. First objective will be economic decisions.
Okay.
That is recommended by a True Blood committee.
Okay.
And similarly, financial reporting will be the one of the major source of information that is utilizing by the users.
Okay.
Because by preparing financial statements or financial reports, we can understand entire company position.
Okay.
So this will be taken as one of the source of information.
Okay.
Then third is financial reporting should disclose potential cash flows, how cash is coming into the company, how it is going from the company, what are the factors affecting on cash flows. Like that, financial report should disclose this type of information also. Similarly, you should also give the earning power, that is earning capacity of a company. What is the earning capacity? What is the profitability position? So, like that we can understand by looking financial statements. And fourth is management ability. Management, because as I said earlier, so now activities are run by the managers. So, that is why, so financial statements should reflect what is their ability to operate the business organization, how they are taking effectively decisions. The efficiency and effectiveness of managers reflected in the form of financial statements. So, that is why, so there is a need to prepare the financial reports and disclose to various interested parties. Similarly, financial statements also, financial reports also should disclose the financial position, that this is anyway it is there, assets and liabilities position of an enterprise. Similarly, financial statements also should disclose the periodical earnings made by the company. Periodical, every year how much profit you are getting or what is the loss incurred by the company. Likewise, so if you go through the financial statements, financial reports prepared by the company, we can understand these factors. Similarly, financial statements also should disclose the periodical aspect, periodical earnings already I told, factual aspects of the company. Factual, that means we have to disclose only facts, but not say manipulations.
So, you mean to say no window dressing?
Yes, no window dressing. And we have to disclose whatever is there, we have to disclose. And there should not be any scope for manipulation of the data.
There should not be any facade.
That is the main. Then last objective suggested by True Blood Committee is management of resources. How managers are effectively managing resources. Generally, in any organization, you can see three types of resources: physical resource, financial resource, and human resource. All these three resources are managed by managers only. So, that is why how effectively they are being utilized by the managers also will be reflected in the form of financial reports. So, covering all these aspects, so we have to prepare the financial statements, financial reports, and disclose to various interested parties. So, these are the certain things suggested by True Blood Committee in 1970s.
So, having seen the recommendations of the True Blood Committee presented by Professor Apparao, Dr. Patrick, what is the scenario in United Kingdom, sir?
To add one more thing to what sir has just said, I noticed that there are three keywords that are used even in the True Blood report. It says about words like being predictable, being comparable, and being evaluative. Now, these are some of those keywords that you find. And it happened that in 1976, the Institute of Chartered Accountants in England and Wales had come out with a report, which is called as the Corporate Report, which went about with making suggestions as to how corporate reporting practices should be seen around. And in that course, they went about with saying that the corporate information that is there must be suitable or made appropriate to the various users. That is one important thing. The second thing that you notice is the report says that the organization which is considered to be an economic entity, now whatever are its impact which has on the society must be revealed through the information that is given in the reports. And then it goes about with saying that wherever the organization goes about with disseminating its information, the people who have that reasonable right to information about the company there, the special groups, it could be the investors, it could be the bankers, it could be the creditors,
it could be regulators.
Their need must be met, the regulators, and I think their need must be met. And to make the information more conducive to the users, they gave out certain philosophies saying that it must be relevant, it must be made understandable, it must be complete, it must be timely, and it should have an element of objectivity and other things there. And what they found is the kind of accounting information that was being disseminated had certain lacuna, and in that sense they came out that they said there are certain other things that are to be needed, and they said that a statement of value added is needed, and a statement of employment, and how the company is trying to go about with dealing with the government in terms of paying taxes and monetary exchanges that are there, and if a company is involved with foreign exchange, as to how that is being done, and what are the future prospects of the company. And another thing that is there is to do with the objectives, the corporate objectives that are there. Even these statements must be supplemented with the regular things what Professor Apparao has said in terms of the position statement, that is the balance sheet, or to do with the performance statement, that is to do with the income statement
Okay.
or the cash flow statement and other things
Okay,
there.
okay.
And in addition to what you have also asked there was another thing that had happened in Canada,
Yeah.
wherein you had the Chartered Accountants of Canada,
Yeah.
and it is called the stamp report and other things there. This came out later, that is in 1980, and they went about with suggesting that whatever information that is given must be useful and appropriate to the various decision makers with regard to the economic information that is given by the company.
Okay.
And another thing that is being told is the information that is being provided should minimize the uncertainty with regard to the validity of the reports that are being generated. And further, the information should be made useful to people who are sophisticated and unsophisticated. In the sense, you've got to make it very simple and understandable. Now, these are the tenets of the Canadian aspects as well.
Yeah. To all types of investors.
Yes,
Investor
sir.
need not be financially educated.
Yeah.
So, okay. So, having seen the scenario in Europe and in Canada and US, sir, can you broadly categorize into the objective of financial reporting? Just in two objectives, can you put forth, sir, for our students' convenience?
Okay, okay. So, in continuation to Dr. Patrick's discussion, now we have seen three reports. One is corporate report, one is
True Blood.
True Blood report USA, second corporate report UK,
Yeah.
third stamp report Canada. And based on the observations made by these three committees, the objectives of financial reporting can be categorized into two only ultimately.
Okay.
Directly or indirectly, definitely you will focus on only those two aspects.
Okay.
Number one is investment decision making. That means financial reporting should be useful for making investment decisions.
Okay.
Investment decision
Okay.
from the shareholders' point of view, potential investors' point of view,
Okay.
or general public point of view.
Okay.
So, whatever information provided by the financial statement should be useful for investment decision making.
Okay.
For example, if you want to buy shares in some company, you will see the earning per share, market value per share, and market share of the company, earning capacity of the company. So, all these things are disclosed through financial reporting only.
Okay.
So, that is why, so broadly we can say that it should be useful for investment decision making purpose.
Okay.
And also we can understand the uncertainty of the future earnings. By analyzing financial reports, we can understand whether company is going to give correct profits, correct return on capital or not. And also we can also compare two or more organization data. For example, what is the earnings generated by the X company, what is the earnings generated by Y company, and relative performance we can understand.
Okay.
Based on that we can take decision. If a company generate more return, generally public or investors are interested to buy shares in that company than other loss making company.
Okay.
So, that is why investment decision making is
Yes.
one of the objectives of the financial reporting.
Yes.
Secondly, it is also called as management accountability. As I said earlier, so financial statements are nothing but a reflection of management accountability.
Yeah.
Because of nowadays largeness, almost there will be huge capital and also 1,000, 2,000 employees are working in the organization.
Yeah.
There will be more so many buildings and machineries using for the
Yeah, the
manufacturing of
turnover
goods
of
and so.
companies
So that's
maybe
why,
more than the GDP of some
yes, yes.
countries. Yeah.
So, that is why in order to judge the level of performance exhibited by the managers working in the organization, then there is a need to see the financial reports of an enterprise.
Okay. Okay.
That is one. Secondly, they are also automatically accountable to the shareholders, isn't it? We are
Fine.
saying the accountability is
Ultimately,
important.
that is the main
Reporting is nothing but accountability.
Yes.
Because reporting word itself indicating they have to report to some other parties.
Okay.
Maybe shareholders or governmental authorities,
Yeah.
whoever is connected to the organization.
Okay.
So, that is why, so it is a kind of accountability to the owners or the governmental authorities.
Okay.
Similarly, managers are required to safeguard the resources that are employed in the organization.
Okay.
Because whatever resource, there may be plant and machinery or vehicles or computers, isn't it?
Yes.
So, all those things are using for production activity
Yes.
or some generation of the services.
Yes.
So, that is why it is the responsibility of the managers to see that those resources should be properly utilized and also protected by the managers.
Okay. So broadly, you want to say all the objectives can be put in two objectives.
Two objectives.
Major objectives.
Yes, yes.
You know, to make the investment decisions, and also management accountability. So these are the two
These
main
are the
objectives.
two objectives.
Okay.
Then micro level, normally from the preparation point of view, For example, if it is financial statements, let us say we will prepare the income statement, balance sheet, cash flow statement, etc.
Okay.
But from the preparation point of view, we have different objectives.
Okay.
But from the reporting point of view, these are the objectives.
Okay.
These are the broad objectives.
Okay.
Then financial statements point of view, for example, income statement is prepared to know the profit or loss.
Okay.
Similarly, balance sheet is prepared to know assets and liabilities position.
Yes, yes.
What are the assets held in the company? What are the liabilities owed by the company?
Yeah.
Then now we can also prepare cash flow statement, then to know the cash movement in the organization, isn't it?
Okay.
So that is micro level.
Okay.
But outsiders point of view, broadly speaking, these are the major objectives of any financial reporting.
Okay.
Whether it is manufacturing, trading, service organization, or say banking organization.
Okay.
Like that, you can apply these decisions to the these objectives to any kind of organization.
Okay. So, having seen the objectives, the concepts, and the development of the financial reporting in various countries and even in India, sir, how a financial report should look like? Because from company to company there may be some variation, from sector to sector there may be some variation. Dr. Patrick, what do you think? What are the qualities of a good financial report?
I understand whatever Professor Apparao had gone about saying, trying to summarize the essence of why you need the reporting part.
Yeah.
We say that, as you rightly said, it is also do with not all companies are the same, even across the sectors that are there. Now, if you go about it summarizing the qualities of a good reporting standards that are there,
Yeah.
we begin with saying that the reports got to have a quality of being comparable. Now, comparability is across the sectors,
Yes.
or within the company that is there, across the years that is there, we are looking for comparability.
Yes.
Another thing is there is another thing which goes along with comparability is the aspect of consistency.
Consistency.
So there must be similar aspects which must be considered. And we have said a little while ago that it should have a quality of being reliable, so that it goes about with reducing the aspect related with uncertainty there.
Yes, sir.
And report should not be delayed. It shouldn't go about with delaying, so it must be timely.
Timely available.
And it must be complete. It shouldn't be left incomplete that way there. I'll tell a little later as to what happens when it is incomplete there. And moreover, it must be very objective.
Okay.
I mean, meeting the requirements of the users that are there.
Okay.
And it should go about with saying that it should have an element of materiality,
Okay.
so that it goes about with serving the purpose of the auditors as well as the people who prepare the accounts. And it should be neutral. At this point, I tell there was a lot of focus, especially in US if you look at there. What we see is we have one part of the accounting standard wherein the focus is more about the rule part of it, and other is to do with the principle part of it. The rule part of it is more to do with the US GAAP,
Okay.
and the principle part of it is to do with the IFRS.
Okay.
So here what we go about with noticing is it should be substance over the rule kind of a thing, which is, or form as you say there, that is very important. And the other thing that is there is you have to bear in mind that it should be understandable. I mean, there is a lot of accounting jargon and other things. Common people may not understand what these things are. So it must be made understandable. And the reports must always be accompanied by the management decision and analysis, whatever things that are there, which enhances the readability of the reports that must be there.
Yeah. Okay. So, very good points you have presented to us, sir. If you talk about consistency, reliability, materiality, neutrality, one important thing that you have highlighted is that substance should
Substance
rule
over
over
form.
the rules. So that is very interesting thing, and it should also be understandable, and the MDA, management decision and analysis, which are very important, vital to the report, financial report. So now, Professor Apparao, what are the, who are the parties who are interested in financial reports? We might have already discussed in the beginning.
Yes.
Would you please, discuss in detail?
Okay. So already I have given the parties who are interested in financial reporting.
Yeah.
Specifically, there are so many parties are interested in financial reporting system.
Yeah.
Right from shareholders. For example, shareholders are interested in financial reporting because they want to know the financial performance of the organization,
Yeah.
what is the earning capacity, what is the dividend declared by the company, what are the assets held in the company, liabilities owed by the company.
Okay.
Likewise, primarily shareholders are interested in financial statements data
Okay.
to understand the overall performance of the company, overall performance.
Okay.
As I said earlier, now organizations are say complex in nature nowadays, because they are also run by say managers and owners directly involved in the activities of the organization. So that's why now as a shareholder outside to the organization, they are interested to know what is the level of performance, what are the earnings made by the company during the year. So similarly, what are the assets acquired. Likewise, there is a need to see financial statements prepared by the organization periodically. That is from the shareholders point of view. Similarly, now we have investors, that is potential investors. As I said earlier, potential investors outside the organization, those who want to buy the shares or sell the shares, they are also interested in say financial reporting data to take investment decisions. So this is already covered, no? And they will also analyze the ability of the company to pay dividend and also risk and return, isn't it? Then also they will also see the market value per share. So they will focus on these aspects and take decision. For example, as an investor, even we can also invest money in some the investments and take decision, isn't it?
Yes.
So what we will see first, we will see the image of the company, goodwill of the company, and also the return given by the company. So based and what is the risk involved. So risk and return, based on this we will take the decision. So similarly, employees also interested in financial statement data. Employees who are working within the organization, including management. Particularly in the case of private organizations, so employees look about the stability of their employment. Because nowadays some companies are closing also, isn't it?
Yes.
So what is the stability of their employment, whether they are going to continue or not. Similarly, they will also assess ability of the company to pay salaries. This is important now, because if company is going to insolvent, then sometimes they cannot pay
their
salaries.
lives are at stake.
Then because whether they are going to get their benefits or not, that is important. So that's why, so as an employee of organization, you need to see what is the profit position and losses position, so continuity position, what is the demand for the product, like that. Similarly, so lenders, that is finance providers. Now like banks, financial institutions, so these are external to the organization. Particularly banks and financial institutions also interested in financial statements data. Generally, if any organization applies for loans, short term or long term loans. So generally what they will see, because if you apply for loans, automatically they will ask for the annual reports and financial statements. So based on that they will take decision. So if the company position found to be good, then they are going to sanction the loan. Particularly they will assess the credit worthiness of the company. Because in the case of individuals, they will sanction loans based on our credibility and salary and other particulars. But in the case of companies,
it is a financial report.
What is the evidence? Nothing, because they have to definitely see the income statement, balance sheet, and sanction the loan, isn't it? So that's why based on that they will analyze the repayable capacity of the loan. If it is found that if company is not going to pay the loan, the principal plus interest, then they cannot sanction. So that's why if any organization applies loans for say some crores, nowadays the companies are taking crores of rupees loans. So 5 crores, 10 crores, like that. So that's why definitely they will see 5-10 years annual reports data and sanction the loans. So this is from the point of view of lenders. Similarly, customers also interested in financial statements data, just to know the image of the company and also continuity of operations. As a customer, for example, I can buy some item from some company. Whether that company is going to exist in the business environment or not, that is important, isn't it? If it is
that is closed immediately, then for servicing your product,
post-sale service will become a problem. That's why, so continuity operations we will see. Normally, if we are going to buy anything, we will think and buy, isn't it? So knowingly, not knowingly, we will do all these things. Isn't it? Similarly, they will also see the quality of products.
Who is producing?
Quality of products that are producing by the company. Nowadays, if you see the annual report, everything they are presenting, what are the types of products with a diagram and all that. So that's why, so definitely you can understand the company position by referring the annual reports or financial reports. Similarly, we have governmental agencies. Governmental agencies like say central government authorities or state government authorities are also interested in financial statements data for regulatory purpose, tax purpose, and also control purpose.
Yeah.
Because whatever policies are made by the government, they are based on the reports generated by the companies only. So, if for example, in 90s, so many public sector undertakings are say closed and also converted into private organizations. So, because of losses accumulated. So, that is why the government is forced to take decisions to privatize all those public undertakings.
Yeah.
So, in 90s and 2000 like that.
Yes.
Some are closed, some are say
Joint venture, operating in joint venture.
like that. There will be decisions. Then one more thing is general public also. General public also interested, general public just for information purpose.
Yeah, general public, he may want to become customer,
yes,
he may want to become investor.
Yes,
he may
yes.
want
General
to,
public, for example, for curiosity sake, normally if you see the newspaper, so if any report is generated by some Reddy Labs or some Sony company, just we will go through, isn't it?
Yes.
So, just what are the operations,
Correct.
what is the dividend and what are the assets, like that.
Yes.
Just so to know the, and also general public also see other aspects like what is the contribution of enterprise to the society,
to the country, to the society.
And what are the activities in addition to the manufacturing,
What
are the other activities undertaken by
activities?
the company.
Okay.
All these things just reflected through financial reports, isn't it? And we can also see the growth of the company.
Yes.
So, this way, so the information may be useful to various parties.
Okay.
Within the organization, manager, it is also useful for managers. As I said earlier, useful for decision making purpose, isn't it?
Yes.
Because though, let us say SBI for example, you are an employee of SBI, though you are working in the organization, then if you do not see the annual report of SBI, you cannot understand what are the profits or what are the losses, how many loans are sanctioned, isn't it?
So, it is your responsibility to know it.
Yes, yes. Because as a manager or say employee of organization, you need to refer.
You are a member of the company.
Yes, yes. That is why as a reference material. So because let us assume if there is no financial report, then everything will be in dark.
Correct.
Isn't it? We cannot understand.
Yes.
Isn't it? Because if it is one man company or a sole trading company, we know what is going in the organization. But in the case of big companies, you cannot understand, though you are working, even for owner also cannot know what is going in the organization.
Correct.
Isn't it?
You are right.
So, like that, so nowadays the annual report or financial reports are very, very important for any purpose.
So, you mean to say there are about 6 to 7 parties interested in the financial reports?
Yes, yes.
So, sir, Dr. Patrick, what are the provisions recently? We have Companies Act amended 2013. What are the provisions made under this act with reference to financial reporting? Can you explain to us?
Okay, what I do is I'll briefly give a list of changes that had come in the reporting aspects when it comes to the Companies Act of 2013. Probably as a student, I have studied the Companies Act of 1956.
Yes.
Then we had, after a big hiatus, this Companies Act of 2013 coming in, and there were recent amendments that were made in 2016 as well.
16, yes.
So, in 2013, the first thing that was there about the uniform period of reporting there. Companies have their own ways. Different companies vary with their reporting period. Some do it from January to December, some do it in some other periods that are there.
Okay.
Now, the uniformity is that the financial year would begin with 1st of April and go up to the 31st of March in the next year. This is one major thing. And National Law Tribunal also had to be brought into confidence in trying to bring about the changes in this area. Now, the other thing is to do with the aspect of National Financial Reporting Authority. Now, prior to it, there was the National Advisory Committee on Accounting Standards, which was there. And they had gone about it saying this NFRA would look into promoting and enforcing of the reporting standards and other things there, and auditory practices and other aspects there. The third thing is about the auditory reports that are there, or I would say the board reports. Now, what is the composition of the board of directors? Has anyone been penalized? What are the changes that have happened in the company? Or the additions or deletions of product or other things that are there in the company? Now, this is what was done. And later, we go about noticing as to the rules that are related with depreciation have undergone change. And how do we go about with utilizing the amount that is available, which is collected in the form of share premium and other things there. And things to do with reserves, how they are being used, the various types of reserves that are being told out. And the Act had gone about with saying as to if there are some fraudulent practices and other things there, whether you will go about with a reopening of those accounts and revising the accounts that have been reported. So a lot of those changes that have been brought in, and some of them were even to go about with complying with the IND IS. So these are some changes that have been brought in according to the Companies Act of 2013.
Okay. So I think the major change is, the reporting period.
Yeah.
There should be uniform
Yes, yes.
reporting period across the sectors among all the companies in the economy.
Yes.
So that's a very good thing, very good development. Sir, Dr. Apparao, Professor Apparao, and having discussed, Dr. Patrick was talking about NFRA. Can you just tell about the role of NFRA in the reporting practices? Like he was highlighting NFRA.
Okay. Now, in continuation to Dr. Patrick's discussion, because in order to improve the quality of the reporting system, so many amendments are made in the Companies Act, and also we have accounting standards.
Yeah.
And accordingly, now companies are generating different kinds of reports and disclosing information to the users.
Yeah.
Now, as I said earlier, Professor Patrick said that earlier there was NACAS, National Advisory Committee on Accounting Standards.
Okay.
So that is the advisory body to the central government to advise about the accounting standards in place of National Advisory Committee on Accounting Standards.
Okay.
Now, as per new Companies Act 2013, they have created National Financial Reporting Authority.
Okay.
And that NACAS is closed and NEFRA is created.
Yeah.
The role of NEFRA is whatever accounting standards are designed by the ICA, so they should be recommended to the central government.
Okay.
Then in turn, central government recommend to the industry.
Okay.
Like that, for better implementation of the accounting standards, the National Financial Reporting Authority is created.
Okay.
And in addition to this, there are several amendments are made in the Companies Act with reference to financial reporting.
Okay.
Number one is, what are the books that are maintained by the different organizations?
Okay.
Also specified in 2013 Act.
Okay.
And similarly, audit of annual accounts is compulsory for all registered companies.
Okay.
Audit. That is also clearly mentioned in 2013 Act.
Okay.
And similarly, as per Section 2, subsection 40 of Companies Act 2013, financial statements include balance sheet, income statement, cash flow statement, statement of changes in equity, and explanatory notes.
Okay.
So these are called as components of financial statements. Every registered company required to prepare these statements and disclose the information.
Okay.
It is these statements are also mentioned in accounting standards.
Okay.
Similarly, as per Section 133 of Companies Act 2013,
okay,
it is mandatory to comply with accounting standards issued by central government from time to time.
Okay.
That 133.
Okay.
Then similarly, as per Section 129 of Companies Act 2013,
okay,
financial statement shall give true and fair view of state of affairs of the company.
okay,
Because this is also clear, true and fair. You have to disclose true information and fair. That means data should not be influenced by the personal bias of the preparers.
okay,
There should not be any scope for the manipulation.
Okay.
And similarly, as per Section 135 of Companies Act 2013,
okay,
every company having net worth of more than 500 crores or turnover of more than 1000 crores or net profit of more than 500 crores during past 3 financial years, those companies are required to spend 2% of amount on the corporate CSR activities.
okay, okay,
That is also clearly mentioned in 2013 Act.
okay,
2000. So these are the some of the changes made in the 2013 Act with reference to corporate reporting.
okay. So, sir, you have been talking about, Dr. Patrick's, about the management development, management decision and analysis, and what is the responsibility of the directors in preparation of the financial reports?
Now, when the directors are there, they can't observe themselves with how they carry out their duties and responsibilities in trying to go about with making the system transparent and not hiding any information that is there. Now, what was seen in the case of Enron, WorldCom and other companies that were there, later the directors have said that we were not told or we were not aware of what the things which had gone into the reports that are there. Now, the directors can't absolve themselves. Now, it is done in toto in involving them in trying to tell out. And what sir was saying about NEFRA and other things now it is made in such serious way that if the individual as such goes about with making an error, then probably they can be prosecuted, they are liable for fine, imprisonment and other things that come in there. And as individuals or firms, it goes in. So collectively, when it comes, as I've said, one of the provisions of the 2000 Companies Act as well there, we go about with giving the board report. It tells about the composition of the board, the changes that have been brought in, and how many companies they are serving as board.
Sir, I think there's a caller in line.
Right.
Can we receive the call, sir?
Yes.
Okay. Hello. Hello.
Hello?
Yes.
Yes, can we ask the question right now?
Yes, please. You can ask.
Good afternoon, sir. I am Missy.
Good afternoon.
Good afternoon, sir. I am Missy. Thank you for the good information presented on.
Very good afternoon.
Tell me.
Yeah, you can ask the question, please. Hello.
Corporate financial reporting.
Yeah, thank you, thank you. You can ask the question, please.
My question to you is there any link between
Yeah.
Is there any link between Cadbury community recommendations and financial reporting?
Oh,
Yeah,
you
and I'll
mean to
take
say, is there any relation between Cadbury committee recommendations and the financial reporting?
Okay.
Yes?
Yes, yes.
Is it the question, Nisi? Hello?
Yeah, we go for it then.
Yeah, okay. So, I think, Dr. Patrick, would you like
I
to
think
field
it
the
is
question?
Cadbury Committee report was one of the precursors for the corporate governance.
Okay.
Now, corporate governance is combination of rules, regulations, conduct, how do you operate the company and other things there. And as you said about the role of directors and the corporate governance that is there, I mean, research has gone about showing there is relationship between how you go about with reporting the financial information and the good corporate governance that is the company there.
Okay.
So it was actually one of the things that you would have been asked at a later stage.
Yeah.
There is a very strong relationship between the corporate governance part and the reporting aspects.
Okay.
And in the beginning, what sir has said about disclosure, transparency and other things there, that is very much embedded in the tenets of corporate governance.
Okay, okay. Thank you, sir. I think till another caller calls, then we can go to another question, sir. What is the role of SEBI in financial reporting? I think Professor Apparao can throw some light on that.
Okay. In India, financial reporting is regulated and controlled by three authorities. One is Companies Act, the old 1956 Act and 2013. And second is the accounting standards issued by ICA. And third is SEBI also. SEBI. And income tax anyway, it is also indirectly controlling the financial reporting system in India. These are the four authorities generally monitoring financial reporting system. Then already we have discussed about the Companies Act provisions and all that. Then SEBI also indirectly regulating the financial reporting system in India. Because of so many corporate frauds and also financial irregularities made by different entrepreneurs. So like that, so SEBI particularly focused on certain disclosure aspects. So they have given 5-6 points about the corporate reporting. Number one is clause 32. Clause 32 as per SEBI, the companies are required to dispatch a copy of complete or full annual report to the shareholders. That is one. It is the responsibility of the organization to dispatch or say give a copy to the shareholders. That is one. Then secondly, cash flow statement also should be disclosed. Mandatory, because before 2002 cash flow statement was not compulsory, particularly before 2001. Now after 2001, every company is required to prepare cash flow statement. It is clearly mentioned in clause 32 of the SEBI guidelines. Then similarly, material developments
Okay.
and also price sensitive information also should be disclosed by the enterprises.
Okay.
Okay. Then next, as per clause 41 of SEBI guidelines, interim unaudited financial results also should be disclosed and published in the newspapers.
Okay.
So that's why all the big companies are now preparing say quarterly financial statements and publishing in the newspapers.
Okay.
That is also. Then similarly, clause 49 says that corporate governance report. Corporate governance report also important. Because as Patrick said that, so nowadays governance play important role. What are the internal rules and regulations, and how to operate the organization, how to control the activities, how to avoid the manipulations.
Okay.
All these things reflected in the form of corporate governance rules and regulations.
Okay.
Similarly, we have to comply accounting standards. SEBI also says that clause 50 says that companies are required to adopt accounting standards which are suggested by ICA. These are the some of the apart from actually SEBI is for regulating the stock market and also controlling investment aspects, etc. But apart from their activities, they are also saying something about the corporate reporting.
Okay.
Just to add one thing to what Professor Apparao has said, in 2017 there was a committee constituted under the chairmanship of Uday Kotak.
Yeah.
And the Kotak committee had gone about with giving 81 recommendations.
Okay.
This worked under SEBI there to see how transparency, disclosure practices and obligations are there.
Okay.
And they also went about with suggesting how do you go about with combining the reporting standards along with the corporate governance practices that are there.
Okay.
Just to say that SEBI also plays a vital role in trying to go about with enhancing the validity, reliability of the financial reports that are made.
Okay. 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 Sir, can you just discuss about the depreciation? The significance of depreciation in financial reporting.
Yeah, okay. Now, as I said, one of those things, depreciation is the fall in the value of an asset.
Yeah.
And there are 10 various methods that are there to go about with trying to comply with the depreciation reporting.
Yeah.
The income tax authorities usually accept the return on value there.
Yeah.
But here in the Companies Act of 2013, it was seen that companies were divided on the Schedule 2,
Yeah.
they were divided into 3 classes.
Okay.
Now, the class 1 kind of companies went about with saying that they should go about with complying with the residual value or the useful life of an asset is a method that will be used for reporting the depreciation.
Okay.
The class 2 companies that are there are the ones which are taken care by the regulators. Let us say in the case of insurance, it is to do with IRDA, or some telecom companies, it is to do with TRAI.
Yeah.
Now, they have gone about with suggesting that it could be the useful life of an asset that is there. And the third category is companies which don't come under the first and the second class.
Yeah.
And these companies, the depreciation methods are beyond the useful life methods that have been applied to.
Yeah. Okay. Okay.
Now, in addition to Dr. Patrick, regarding depreciation, it is clearly mentioned in Companies Act 2013 that the scrap value should not exceed more than 5% of historical value of the asset.
Okay, because that is frequently used to,
yes, because scrap value, there is a possibility of manipulating.
Yeah, misrepresent, to avoid the misrepresentation of the facts.
It is clearly mentioned that the scrap value should be maximum 5% only.
5%.
Then remaining amount can be used for depreciation.
Yes.
Because if it is 100 rupees value of asset, then minus 5 rupees on 95 rupees only you have to provide the depreciation.
Okay. Okay. So what do you think that the recent developments or the trends in financial reporting, Professor Apparao?
Okay. If you see the reporting pattern developed and prepared by different companies in India and also abroad, you can see so many changes. Particularly after 90s and 2000, there are significant changes in reporting pattern prepared by different companies in India and abroad. Earlier, financial statements are confined to only, say, for example, income statement, balance sheet, and maximum cash flow statement. Earlier, fund flow statement was there. Now, gradually, now financial statements number is increased. The financial reporting number is increased. Now, earlier they used to prepare in 10-20 pages. Now, financial reports are preparing in 100, 200, 300 pages. If you see annual reports of any big company like Hindustan Unilever Limited or ICICI Bank or SBI, so you are getting information in 200, 300 pages. That means volume of data is generated. So, in addition to income statement, balance sheet, so much information is presented and disclosed to the users.
Okay.
So, if you want to know anything about, you can see annual report and understand what is there in the organization.
Okay.
So, that is why now the scope of financial reporting is expanded like anything. That is why now we are calling corporate reporting.
Okay.
So, that is why if you see the developments, apart from conventional presentation, now ratios are using for the presentation of the data, then vertical presentation replaced by horizontal presentation, comparative statements also preparing. Similarly, cost audit reports also compulsory
Okay.
as per section 233B and section 201, 209 subsection 1 of Companies Act.
Okay.
So, earlier cost audit was not compulsory.
So, these are the recent trends you
Yes.
think. Okay. So, thank you very much, sir, for coming and sharing your valuable information on financial reporting. And we have been talking about, you have been sharing the information on the True Blood Committee and sharing the information on the stamp report and the corporate report in the UK. And you are also talking about the recent trends and the Companies Act role and the provisions in the Companies Act 2013 and the depreciation role and the resource role. I just want lastly one small thing from you, sir, like how these resources are presented in the financial reports.
Results means
Resource and provisions, provisions and resource. Yeah.
Reserves
Just
and
in 1 minute, can you please?
Okay.
Yeah.
Generally, as per Companies Act 2013,
Yeah.
There is a provision of free reserves.
Yeah.
Free reserves
Yeah.
can be created from the profits.
Okay.
And those free reserves can be used for only payment of dividend.
Okay.
Dividend.
Okay.
They cannot be used for other purposes.
Okay.
Other purposes.
Okay.
Otherwise, they have to continue to maintain the balance sheet.
Okay.
If you don't want to use the free reserves,
Okay.
then you can show on the liability side
Okay.
and continue to present in the financial statements.
Okay. So that can be used for plowing, that can be
Yes,
used
yes.
for reinvestment.
Reinvestment.
There is
or,
another thing where you talk about the debenture redemption
Reserve.
reserve as well.
Yeah.
Right?
Yeah.
That is created to go about with redeeming the debentures.
Yeah.
And towards the end, if I can add a word or two about it.
Yeah.
Now, what you find is this reporting is the source of corporate communication.
Yeah.
And these days, there is a lot of words like purpose, people,
Yeah.
which has been said a lot about the reporting part.
Yeah.
And there is a shift that is happening, wherein in the past, the focus was more on the shareholders.
Yeah.
But now the focus is shifting towards the stakeholders.
Stakeholders.
And another thing that is there is probably, we have heard the word capitalism at very long,
Yeah.
but there is a new thing that is coming up where we say about compassionate capitalism.
Compassionate capital. Yeah.
Now, keeping this into view, the
You're right.
reporting standards are undergoing tremendous change in the recent past.
Yes. So compassionate corporate reporting, this is
Capitalism and other
yeah, capitalism in the reporting process. So thank you very much, sir, Professor Patricks, and for coming
Thanks a lot.
and sharing the information. Professor Apparov, thank you very much, sir. So this is what we have discussed about financial reporting, and financial reporting is all about sharing the financial information of the company to the stakeholders. So the thrust is more on the stakeholders' interest rather than the shareholders' interest. The shareholders' interest is just the profit, but the stakeholder is the larger term. So the companies, while reporting the financial information, they had to fit into the stakeholders' concerns, stakeholders' expectations, not just the shareholders' expectations. So with this, we can conclude. And if anybody has any query, you may call and you can share any question so that we can answer.